So, you know that in every single fundraising deck, you have to cite a market size estimate. Well, how do you even come up with this number? Well, that's what today is about. In fact, we're going to be talking about how this number is not only relevant for you to cite in your fundraising deck, but can actually help you decide what kind of startup and what kind of business model to build as well. So, without further ado, let's dive on right in. Hi, everyone. My name is Shuo Chen. I am a former founder, now investing in founders and teaching founders at Berkeley and Stanford. I'm also a board member here at Decode, the largest founder community co-host across Berkeley and Stanford. And today I want to share with you some of the best practices we've seen around how to identify this market size number that you have to mention on all fundraising decks. Before I dive into that, though, I want to make a quick announcement. The Decode annual conference is back. This is the conference for the top founders at both Berkeley and Stanford. And we host this event across the two school communities. But of course, we welcome founders if you come from other schools as well. This year's conference is going to be hosted on campus at UC Berkeley on November 15th. If you want to learn more about how to sign up for the conference or even apply to join the conference team, please feel free to check out the hyperlink below. We already have a roster of incredible speakers from founders like the founders of Higgsfield, the founders of Foundry, the founder of Replit, to investors like the co-founder of Lightspeed, to other amazing thought leaders in technology, like the chief people and systems officer at Roblox and 7-time chief information officer at Okta. We have a packed schedule for you. And this is just the first batch of speakers that we're starting to share. We'll be sharing more speaker names on a rolling basis with you. But if you haven't already checked out the conference related information, please check it out below. Last thing I want to mention here is something that makes the Decode conference really unique compared to any other event that you'll go to is Decode conference has what they call roundtables. So roundtables are these small, intimate discussion sessions you'll have with every single speaker after their main stage session. So you'll hear their background, their story, their thoughts, their tactics for you on stage, and then they'll immediately host a small, intimate roundtable with a hand selected of about a dozen attendees right after their main stage session. This is your chance to ask in-depth questions, ask about personalized situations, and just follow up to have a more in-detail conversation than you can have in a big conference room. And so this is a really good opportunity for founders who are currently building to get your top questions, especially about how you're building, answered. So those applications start rolling right away. So please make sure to submit those applications for a slot at the roundtable soon. And of course, because every single speaker will be hosting roundtables, you have a really good shot if you register early at being one of the attendees in these small, intimate roundtable sessions. And of course, there's opportunities to meet speakers and Decode board members across lunch and dinner and other conference-related sessions as well. So check that out below. And of course, if you want to get really hands-on, we have plenty of opportunities for you to apply to join the conference team as well. So check out that below. But as promised, without too much of a distraction from our main session today, I want to get back to the 3 tactics we want to cover around how you come up with this market size number when you're putting together your pitch. So without further ado, finally this time, to our first tactic. First tactic for estimating your market size is to use a bottoms-up approach. While that might sound really obvious, it's actually really hard to land on the exact equation you would use to figure out what your potential market looks like. Typically, you want to start by building out a business revenue equation. This is where you're trying to calculate how much potential revenue you have the chance at making. This is just a very basic revenue number where it's typically formed by a certain number of customers that you could potentially sell to, multiplied by the average revenue expected from per customer per year. This is just a rough equation to help you come up with the potential annual revenue you can make. So these numbers are calculated by, of course, broken down into number of customers and average revenue per customer. I want to break that down for you for how to come up with these numbers. So if you're trying to figure out number of customer, well, this whole equation sounds really simple, but how do I get the exact number? Well, first of all, you want to focus on the segment that contribute to your revenue most significantly. For example, if you're DoorDash, then most of the people who actually use DoorDash are Americans who are full-time employed, aged between 25 to 40, who eat out at least once per week. If you do more research, you'll realize that all of the other segments that use DoorDash are much smaller compared to this primary segment. So focus on the segment that contribute to your revenue most substantially. And then based on that segment, you want to estimate how many new customers can possibly even be acquired and also retained within the next 5 years for you. And of course, if you happen to be selling a product in a market that has even longer cycles than 5 years, then you want to estimate ahead to 7 to 10 years for long-term trends like electric vehicle adoption, because that takes way longer. But if we're talking about something in consumer or an enterprise, typically we're looking at a 5-year timeline. And we want to see how quickly can you actually acquire these new customers. A lot of times it depends on how many team members you even have to actually go out there, acquire these customers. What does your funnel look like? How many people do you actually need to retain these people to service your customers? And then using those numbers, you want to benchmark market share against existing dominant players. So if even the biggest players right now only occupy X percentage, that's probably your most ambitious target just for benchmarking purposes. And then you want to adjust your expectations based on market fragmentation and distribution difficulty. So how fragmented is the market and how hard it is to distribute? So capturing 10% of Fortune 100 companies is more realistic than capturing 10% of 100,000 small, medium-sized businesses because of just the sheer number we're talking about. Capturing 10% of Fortune 100 companies is just 10 companies, whereas if you're trying to capture 10% of 100,000 small, medium-sized businesses, well, you better be ready to service a lot of customers. Of course, now with AI, you can leverage that to help you service more customers than you were previously able to serve, limited by a smaller team at the beginning, at least. But you want to make sure that these are realistic numbers you're calculating. And then once you have the number of customers, then you can start to calculate the average revenue per customer per year. You want to focus on the market sizing on, again, your core revenue stream. And then you want to start to estimate the transaction volume. So how many products will be consumed in your product category, or how much data storage is required, or how many seats per company might purchase. So you can typically get a sense of how people are behaving by just looking at industry benchmarks. For example, how much is their need? How much do they buy in one go? How frequently are they buying? Is this a one-time in a year purchase where this one purchase will last you the whole year? Or do I need to buy a dozen every single time? I need to refresh and I need to do this every week. So it depends on what the use case is. Based on this transaction volume number, then you can start to estimate pricing using mainly 3 approaches. So market sizing, high level, you can look at benchmarks for. Transaction volume, you can generally look at volumes for. For example, if you're an enterprise who's looking to buy a certain type of software, that's typically only happening once a year. And if you're looking to switch up providers, that's really happening every couple of years. But it's really with pricing that becomes a little bit more pricey or challenging because you haven't even figured out how to price your product yet. So this is useful not just for estimation purposes, for putting it onto a pitch deck, but it's also really good for your reference if you're actually just building a company and trying to figure out, how do I figure out pricing for my product? So there are 3 main approaches for estimating pricing. One is value-based. So generally, this is the best approach and ideal if you're building an enterprise software company, especially if you're something in software as a service. This is where you can charge benchmark 10 to 30% of the value that you've created. So if somehow you've substantially created 10x more value because you allow people to do things faster, better, cheaper, then you can start to charge a small portion of the value that you're delivering. The second way to think about pricing is competitor-based, which is very common for consumer products. So this is where you're anchoring to existing products and you're explaining any premium or discount relative to other products that are competing in your category. So this is purely competitor-based. Last way of estimating pricing is cost-based. So if you're in an area building a product in a space where it's very ops heavy, operational heavy, or it's very asset heavy, then this is where you want to add a margin on top of the cost of just delivering your product or service. So if you know you're incurring huge costs to even just deliver the value, then you want to make sure to add a healthy margin on top of that to account for any other costs. So to recap, to estimate pricing, you have 3 approaches: value-based, competitor-based, or cost-based. And with all of these estimates in place, then you can start to construct this equation of just revenue equals number of customers times average revenue per customer. And in, again, average revenue per customer, this is where you're estimating the frequency at which they're buying and what is a unit price of your product. So with all of this, you can get a good sense of what a potential annual revenue range might look like. Last reminder, I know I've said this before already. You want to make sure that in this estimate, your team is actually currently able to serve this customer base. So if you're saying, I have this massive market, I want to eventually grow there, well, it's not realistic to imagine servicing that entire client base if you only have yourself and a co-founder, for example. So you want to be realistic to say, well, this is what I could perhaps eventually expect in terms of annual revenue, and this is realistically the cost it takes for me to get there. That brings us into tactic 2, which is as you're putting together your market estimate, you want to plan for incremental expansion across your customer segments and products, because not everyone is serviceable by you right now. So you want to figure out, how am I going to expand incrementally? Even if everybody's goal is the same, which is I want to be the biggest, fastest, greatest in this space, you still need to figure out, well, what steps do I take to get there? If the end goal is the same, which is ultimate success, what are the steps that help me prioritize which ones to do first to get there? So for incremental expansion, this is where you want to think about this in terms of customer segments for your product. So first thing to consider here is serviceable obtainable market, SOM for short. This is the realistically obtainable market within the next 5 to 10 years, based on a very practical go-to-market strategy and based on your current team and sales and customer service capacity. So the way to calculate this is number of acquired customer multiplied by average revenue per customer per year. This is the serviceable obtainable market. So this is where you're forecasting for the now to next phase. And then eventually you're starting to think about what the serviceable available market is, short SAM. Serviceable available market is revenue for the initial product and initial target customer segment within your current strategy for the next couple of years. So that could be a very specific customer demographic based on consumer spending habits. This could be a very specific company size if you're building an enterprise product. It could be very specific to a geography or to a perhaps a very specific price point. So this is where you're thinking about the serviceable available market. So this is a slightly bigger number than the previous one because it's not just serviceable and obtainable, but this is serviceable and eventually available. And the last number to think about here is total addressable market, which is TAM. TAM is the most frequently cited number compared to all of the market sizing numbers, but I want to share the other two because TAM is the total addressable market. Eventually, that's not what is currently available to you right now. So you want to make sure to show what your serviceable obtainable market is, scaling up to serviceable available market, and then eventually your total addressable market. So the total addressable market is the total potential revenue that you could make across all of the possible customer segments and products in the category. So this is where you're looking at the number of total customers multiplied by average revenue per customer per year. This is the biggest number that you can cite. Most people like to cite a TAM, total addressable market, that is in the number of billions. So you can show that there's this eventual huge market that you could work on tackling. But if you're a founder in your earliest stages, you want to start with just the first SOM, serviceable obtainable market, to show, well, this is step one. And then eventually we have this big TAM to grow into. And of course, there's no one single definition of the right market size. So textbook definitions for total addressable market or even serviceable available market and serviceable obtainable market, they're all very vague. And as you can tell by all the different acronyms, whether it's TAM, SAM, SOM, they're all very vague. So this is to help you have a realistic plan for how you're going to grow your startup and be able to communicate in a very clear and concise way to potential customers, but also investors. And that brings us into our last tactic, tactic 3 for today, which is as you're estimating this market size, you want to focus only on geographies that are tied to your current go-to-market plan. So global market size is rarely relevant for your use case. Of course, assuming that your use case is communicating with potential customers and investors, but also to sell the vision to your team so that you can attract the best talent to join you and build this together. While it is incredibly tempting to cite this global number, you want to make sure that it should really be focused on where you're practically going to actually run this plan in the short to medium term. So if you're a US focused company, you want to state the US addressable market only. So it's really only if you are in a specific region where you could include multiple smaller countries together because the go-to-market strategies just includes that as an option. But you really want to only aggregate markets if you have a clear international plan in those markets. So if you're currently building a US only company, you don't need to talk about what it looks like for you to include Europe or Latin America or Asia as markets yet. Those are not yet relevant, at least for early stage founders. But of course, if you're already making a huge progress, you're growing and scaling at much later stages, this is where you are looking at much larger international numbers. And as a general best practice, you want to make sure to present your revenue as annualized figures. So if you are working with a customer who is purchasing your product, they're spending $10 million over 2 years because their buying cycle is every 2 years. They just need this thing every 2 years. Well, then you want to, again, annualize that number to $5 million per year. And vice versa is also true. If customers are purchasing you every month, you could annualize that number to show investors what an annualized number looks like. But just keep in mind that if customers are purchasing only every month, it means that they could churn, as in they could drop off and stop paying you. And so you're not efficiently or effective, if you're not effectively retaining them for a whole year, then you don't want to annualize that revenue because that's misleading. So for a lot of the newer startups now that are getting a lot of traction, they perhaps have daily revenue starting to come in. They have some early data to show perhaps a month's worth of data. That's a little bit early to speculate like this will all retain and turn into a year worth of revenue. So this is where you want to assume, okay, there's going to be some churn. There's going to be some new customers acquired just based off of your current growth rate, your current retention rate, and then use that to give a more nuanced version of what an annualized revenue could look like. So with that, we've talked a lot of details around how to estimate market sizing. If you want to learn more about other traps to avoid in this process or tools that you can leverage to help you come up with this number, please feel free to check out the hyperlink below and read more in our weekly newsletter. And if you have any other questions or comments based off of what we shared, again, please feel free to comment or reach out to us on email or LinkedIn. And if you found this video so far helpful, please don't forget to like this video, share with your founder friends, and then, of course, subscribe to the channel. We look forward to answering more questions in a future week session, and hopefully we'll see you soon in person at the upcoming Decode annual conference. Take care.